Hi, grade 11s. This is Mr. Chauke. I'm a professional teacher and tutor for accounting. If you need me to help you with accounting, please do let me know so that I can make your academic problems a thing of the past. In this lesson, we're going to be focusing on how to complete the debtors collection schedule. And I'm just going to give you some simple method that you can use to be able to complete it successfully. Now, here we are required to prepare the debtors collection schedule for the budgeting period 1 March 2020 to 31 May 2020. Okay, but before we do that, I want to highlight some things. Now, firstly, for you to be able to understand the debtors collection schedule, you need to remember why we are doing the debtors collection schedule. Okay, if you remember, this topic is linked in the cash budget. Now, the reason why we are doing debtors collection schedule is that we want to be able to see how our customers who bought on credit are going to pay us, meaning that this will give us an idea to say for this particular month we are expecting this much from people who previously bought on credit. Remember, when somebody buys on credit, they get the goods now and pay for them at a later stage. Hence, we are trying to understand how these people are going to pay us. And for you to be able to complete this activity, you need to understand some few things. Firstly, you must understand why we are using credit sales. We are using credit sales because remember, our debtors are people who bought from us on credit, so that information is contained in the credit sales. Hence, we are using credit sales to see how these people are going to pay us. And you're also going to need what we call the debtors collection policy. You will be given an idea through it in terms of how long your customers are going to take to pay you and how exactly are they going to pay you. So very important for you to understand how to interpret the debtors collection schedule. And the third thing that I want to highlight is your budgeting period. When you do debtors collection schedule, you need to remember the time frame that you are doing it for. How long are you preparing the schedule for, so that you can be able to use that information to complete the cash budget. So now here they say debtors usually settle their accounts as follows. 60% of the debtors pay within the month in which the sale took place, meaning that these people will pay 60% of our debtors will pay in the same month that they have purchased on credit. So meaning that they will pay within 30 days. So it's the same month, okay? And then the next, they're saying that 20% of the debtors, they will pay in the month following or in the following month, meaning in the month after the month of sale, and this will be your month number 1. And the second part, they are saying that 17% pay in the second month after sale, meaning that they are paying in the end month. So you need to be able to write this properly. And then after that, they are telling us that 3% of the debtors is written off as irrecoverable. Now remember, when we do bad debts, we don't include it in the cash budget, but we include it in the projected income statement because it is an expense. I think also you guys need to be able to remember what is included in the cash budget and what is not included in the cash budget, so that you don't confuse your information, because they are going to give it to you just like this. Okay, so now let's go and check how our sales are. Now remember, normally what we are going to do, we are going to start by checking from the sales that took place in January, because remember, we are working for a period 1 March to 31 May 2020, and we are going to start by checking with the credit sales that are given to us, which started in January. So we're going to check if this will affect our collection for the month of March to 31 May 2020. So let's start with the credit sales from January. Credit sales from January, for January, our credit sales is 64,000. Now remember, they gave us the policy for us to understand how these people are going to pay. They said 60% of these people will pay in the same month, but remember, we are doing our budgeting. The period that we are working on is for March to May. So meaning that January, the collection of the same month will not happen. So for January, that 70% will not apply. And then the first month, which is February will also not apply in our collection. Okay, so there's no need for us to do calculations for that. But the second month, which is March, will then apply. So we will need to check what is the policy saying about collecting on the second month. And here the policy tells us that in the second month, 17% of the debtors pay in the second month after sale. We know that the second month after January, it's March, because it's going to be February and March. So meaning that we are going to collect that 17% in March. So we're going to come here. So we're going to come here and try and calculate what is given to us. Okay, so remember they said 17%. So for March, meaning that we're going to say 64,000 multiplied by 17 over 100. This means that from the sales that took place in January, in March, we'll only collect 17% of that. Let's see, 64,000 and then multiply by 0.17 or 17 over 100 is going to give us 10,880, meaning that from those sales they will only collect 10,880. And then in the third month, which is April, okay, they're going to write off bad debts. And then remember they told us bad debts, what is the percentage for bad debts? So we need to check for that quickly. They said it's 3%, so we're going to just say 3 over 100, and then we multiply it by 64,000, and then it's going to tell us what is the bad debts that will be written off from the sales tax that took place in March. So 64,000 multiply by 0.03 is going to give us 1,920. So meaning that we are not going to get 1,920 from our debtors, because these people will not be able to pay us. Okay, then we are done with January sales, and then from there we go to maybe let me just open an extra page. Yeah, from now we're going to go and check the sales that took place in February. So in February we had credit sales of for February, let me just, so for February, remember for February our credit sales so for February our credit sales was 66,000 according to the information that we have here, as you can see. So we've used this, we are now working on this. So it was 66,000. So now what we're going to do, remember same month as February, so we're not going to collect anything. And then the first month will be March. So we're going to check what is the policy for March. They said in the first month we are collecting 20%, so meaning that for March we're going to say 66,000 multiplied by 20 over 100, and then it's going to give us what we are going to collect. So let's see, 66,000 multiplied by 20 divided by 100 is going to give us 13,200. Okay, so this is how that amount was obtained. And then in the second month, remember they said we only collecting 17%, so it's going to be for April, but you must remember that April is outside our period, so meaning that we are not going to do this calculation because it will not affect our period. And then we know that in the third month they have bad debts, so bad debts will be 66,000 multiplied by April will be calculated because it's part of our period. Okay, I just forgot that we are ending with May, so we're going to do it and say 66,000 multiplied by, let's check the percentage. They said 17 over 100, so we're going to say multiply by 17 over 100, and it's going to tell us how much will be obtained, because remember we are ending in May. Okay, so let's see, 66,000 multiplied by 0.17 it is giving us 11,220. So we're going to write 11,220 here, and then we are going to calculate also our bad debts. Remember, it was 3 over 100, right, as shown here. So we'd have that part here. So let's see, 66,000 multiplied by 0.03 is giving us 1,980. So those bad debts will be 1,980, and then from there we proceed to the next month, which is March. Okay, so remember, in March, number one, we need to check what our credit sales are. Our credit sales for March are 78,000. So we're going to have that 78,000 here and check how much is collected in the same month as March will be March. So let's check. They said 60%, so meaning that we're going to take 60% of these. So we're going to say 78,000 multiplied by 60 over 100. If you are told about a discount for early settlement, you will take out that discount and multiply by the remaining percentage over 100. But here they didn't tell us anything about the discount. So 78,000 multiplied by 0.20, it's giving us 15,600. Okay, remember, this is the same month, and then the first month will be April. So remember, in April they said we're only going to collect 17%. So we're going to say 78,000 multiplied by 17 over 100, and then we'll know how much will be collected. So 78,000 multiplied by 0.17 is giving us 13,260. Okay, so let's check the collection for May, which is our second month. So for May, remember they said we are only going to, oh sorry, it's 20 here. It's up. This one will be here. It will be 78,000 multiplied by 17 over 100, and then would have that 13,260 here. Here's going to be 20 over 100. I'll just erase this amount here. So also remember to check if what you've written is correct, because sometimes, you know, when you move between answer sheets you can forget. So let's do it. 78,000 multiplied by 0.20, it's 15,600 here. Okay, let me just select a pen, no highlight. So here it's, when we get the 20%, that's 15,600. So let's just correct the 60% part here, because it's supposed to be 60 over 100 in the same month. So let's see, when we say 60 over 100, always verify. It's giving us 46,800. So we're supposed to have 46,800 here. Okay, and then let's also check here if we did not make any mistake here. I think everything is fine so far. So remember, here we are changing. Other months we didn't have the same month. In February we didn't have the same month. Please don't continue with the 20%, then forget to include the 60. Okay, so now remember, we have from March, it's April, May. So meaning that in June, that's where we'd have, in June we're going to have our bad debts, and then we're going to say 78,000 multiplied by 3 over 100, which gives us 2,340. Okay, so this is how you're supposed to do it. So please always check for such mistakes so that you can avoid them. From there, we're going to move to the sales that took place in April. So we're going to go to April and then check how much our credit sales are. Okay, so for April, according to this information, our credit sales are 120,000. So we're going to have that 120,000 here. Remember, for April, in April, same month, we are collecting 60%. So we're going to say 120,000 multiplied by 60 over 100, and then we'll get how much will be collected. So let's do it quickly. 120,000 multiplied by 0.60 is giving us 72,000. So meaning that 72,000 will be collected in the same month. And then in the first month, which is May, we'll then collect 20% according to the policy here, as you can see. So we're going to say 120,000, and then we say multiply by 20 over 100. So 120,000 multiplied by 0.20 is giving us 24,000. So we would have 24,000 here. And remember, we are ending in the month of May. So meaning that for June, in the second month for June, we will not collect anything because it's outside the budgeted period. And then in the third month, we are going to write off our bad debts. The third month is July. Our bad debts is going to be 120,000 times 3 over 100. We're getting 3.6, and then from there we move on to the next part. We are now going to deal with the credit sales that took place in May. In May, we're only going to focus on the same month. Okay, so for May, our credit sales is equals to 48,000. Okay, so we're going to say 48,000 multiplied by 60 over 100. So meaning that it's going to be 48,000 multiplied by 0.60, which is giving us 28,800. So we'll therefore have that 28,800 here. Okay, remember June is outside, so we're not, first month here will be June, and then second month will be July. Okay, so in August they're going to write off bad debts. So we're going to say 48,000 multiplied by 3 over 100. So let's see, 48,000 multiplied by 3 divided by 100, it is giving us 1,440. So this is the bad debts that we'll write off in August from the sales that took place in May. Okay, so now I'm going to show you how we are going to record this information in the answer sheet. So unfortunately, we would have to go back to at the beginning. So remember, from the sales that happened in January, the only month that was affected was March, right? So that this 10,808, we are going to record it in the answer sheet. Remember, the only sales that were affected, it's March. If you check, remember the first month will be February, second March. So here we're going to write that 10,880, and here we'll collect nothing. And then the bad debts amount will be what we have here, 1,920. Okay, and then from there we go to the sales that took place in February. If you remember, from the sales that took place in February, this is what's happening. We are here. In February, we started collecting from the month of March, which is 13,200, because the same month was not calculated. So we're going to start collecting from March. So meaning that in the first month on your answer sheet, from the sales of February, you're going to start recording in March. Okay, as shown here, March, we have the amount, which is 13,200. And then you are also going to record in April, because if you check here, you do have April as 11,220. So that 11,220 will come here, but here you will have nothing. And then the amount that we have calculated for bad debts is 1,908. So you just write it here, 1,908, and then you proceed to the sales that took place in March. Remember, same month as March is March. So we come here. In the same month, we collected 46,800, as you can see here, 46,800. And then in April, from the sales of March, we collected 15,600, which is what we're supposed to have here. And then in May, we collected 13,260. So you'd have that 13,260, and then your bad debts here are going to be they are going to be 2,340. So very important for you to know how to calculate bad debts, but remember, it will not be included in the cash budget. And then from the sales of April, we are not going to have anything in April. For March, we are not going to collect anything. We'll only start collecting in the same month, which is April, right? So when you go and check for April, same month, we are going to have same month as April, we're going to have 72,000. So you'll write that 72,000 here. And then for May, which is the first month, you're going to have 24,000. So that 24,000 will be written here. And then the bad debts amount that will be written off will be 3.6. So you're going to write that 3,600 here. Okay. And then after you are done with that, you go to May sales. Here you'll have nothing here also. And then you're going to start collecting in the same month. So for May, we're going to have let's go to May sales. We're going to have first month 28,000. Same month 28,800 for May, right? So you'll only have here 28,800, and then from there you go and check what is your bad debts, which will be written off in August. According to here, it's 1,440. So you'd have that 1,440 here. And then from there, one of the things that most learners miss is to get the totals. Let's say it happens that you make a mistake here, but when you add, you're going to get a mark for just adding here. Okay, so let's do it quickly. 10,880 plus 13,200, and then plus 46,800. We would have 70,880. So here you're going to have your total as 70,808. You're going to get a mark irrespective of whether you made an error here. For this total, definitely a mark for just adding. Okay, and then we continue for April. 11,220 plus 15,600, and then plus 72,000. It is giving us 98,820. So we'd have 98,820. So let me write it properly. 98,820, and then you go come and do the same thing here. You add also. I'll bring this to the other side so that I can add properly. So 13,260 plus 24,000, and then plus 28,800 will give us 66,060. And then we can also add the total of the bad debts because there's a mark for that. So 1,920 plus 1980 plus 2,340, and then plus 3.6, and then also plus 1,440. It is giving us 11,208. So our total here will be 11,208, and then you'll be done with answering this activity. We can then compare with the solution if they do have it attached to this. Okay. Now they don't have the solution for this activity, but this is roughly how you were supposed to do it. Okay, if you need more help with this, you are more than welcome to ask me to show you. Okay, and then other activities will look at this with a discount, so you also need to prepare for questions that will normally have a discount. Okay, I hope that you have managed to understand this as we've used this example. Should you need any help with this, please feel free to contact me using the details that are available on the description of this video. Thank you. God bless you. Shalom.